Hey everyone, welcome to the February episode of the Jeff Trapp podcast. I'm your host, Jeff Trapp, and I am so glad that you decided to join me today. And we have got a jam-packed episode, and I'm going to try to cram as much as I can into this episode. And you know what? We might have some spillover into next month, but I just want to let you know that this is one of the most unusual tax seasons we've seen in years. We've got IRS staffing shortages, processing delays from last fall's government shutdown. And as we record this episode, we're in the middle of another partial government shutdown. Now, that might get resolved by the time this episode airs, but whether or not it does get resolved, the impact is really already here. This is not going to be a normal filing season. This is not going to be a normal tax year. And what can you expect? What are we experiencing? What is going on at the IRS, right? We're having refund delays. We're having transcript delays. More identity theft verification letters are being sent out because we've got a lot of folks that are very, very crafty trying to steal people's information. And if you have to, unfortunately, paper file a tax return or a tax return amendment, those are taking months to be processed. We're having e-file issues in forms issues with the one big beautiful tax bill. They're having to issue new forms to make sure that the taxes are filed properly. We're even seeing delays at the state level to make sure that those forms conform with the federal government. And then we've just got this backlog, which it seems like it's been here since COVID. You know, the question I get a lot is, hey, Jeff, is the IRS broken? And it's not necessarily broken. It's just the system is overwhelmed. The people are overwhelmed. They are stressed out. And that really changes the way you need to approach taxes this year. Because you know what? When the IRS is overwhelmed, things will take longer. You'll get slower service and more scrutiny. So you have to be very, very strategic about how you file your taxes, when you file your taxes, and making sure that you do that in a strategic way, being very, very intentional. Now, with that being said, we've got some deadlines coming up that you cannot miss, right? If you have a business and it's an S corporation or a partnership, those tax returns are due March 15th. Now, you can automatically file a 6-month extension to file those at a later time if you'd like. On April 15th, we have the individual and corporate tax extensions. And with those returns, tax will usually be due. And what that means, when you file an extension with those returns, right, you're going to want to make a payment because the 6-month extension doesn't extend the time to pay your taxes. So this isn't the year to be last in line with your tax accountant to wait last minute. You want to be very, very strategic and file, or at the very least, pay those taxes on time by April 15th. Now, I want to talk about kind of the bigger picture here, right? What is going on with the economy and what we are seeing and what we are hearing, right? There's a lot of inflation pressure out there. The Fed continues to be very, very slow in cutting interest rates. And what we're having to deal with is a federal deficit that is just ginormous. And how is the government going to collect and get revenue, right? And that's something that is a very, very big reality that we have to deal with. Now, what we're seeing out in the economy, that the dollar is losing value. And how do you protect your hard-earned money? One, is it paying taxes? No, I don't think so. I don't think the government spends your hard-earned money better than you do, right? And so where can that money be invested? And one, you can make a tax play, you can make an asset play, but you're going to want to invest in hard assets and redeploy some of that capital, right? Because if it's just sitting in the bank earning, less than 1% or even 2 or 3%, the dollar is not going to keep up with inflation because the value is going to decrease, right? And so you want to put your money, if you have disposable income, into hard assets like real estate, like gold, like silver. There are a lot of things that you can invest in. With that kind of being said, one thing I did mention is the government needs your revenue. So when the government needs your revenue, that means they're going to scrutinize your taxes a little bit more. They might be slower in getting things done. You might see lingering issues from 2024 into 2025, into 2026, etc. So now I want to talk about where you have an advantage, especially if you're a high W-2 earner making over $500,000 or a business owner that has $500,000 plus in taxable income. You're in a different atmosphere where you have some great advantages and opportunities to partner with the government, because the tax code is an incentive-based system. You're not avoiding taxes. You want to find ways to redirect your tax dollar. And what does that mean? Redirect your tax dollar. So instead of sending, let's say, $300,000 to the IRS, whether they take that out on a W-2, or you have to pay estimated tax payments as a business owner, you might spend $200,000 into a government incentivized program or investment that reduces your tax bill legally. And you're probably thinking to yourself, Jeff, what does that mean? How can I partner with the government to reduce my tax bill? And that's a great question. So as a business owner, when you reinvest back into your business, you get a tax deduction. So you can reinvest back into your business by buying vehicles, buying real estate. Maybe you want to buy a commercial building instead of paying rent to somebody. You can invest back into employees. All of that stuff stimulates the economy. And so you get a tax write-off for that. And there's many, many other things that you can partner with the government in to be incentivized, right? One of the big ones that clients come to us or prospects will come to us about is like, Jeff, I want to invest in real estate because I want to get a tax write-off. And there's very, very strict rules about how to get a tax write-off with real estate. And also, a lot of times folks don't know what they're doing when they invest in real estate. In real estate, also, it will give you a phenomenal tax write-off if you do it correctly. We've partnered with some of the greatest companies in the country when it comes to real estate investment to help our clients get a tax write-off and not lose their shirt if they don't know what they're doing when it comes to buying a short-term vacation rental or an Airbnb type property, right? One of my buddies, he is a real estate broker and investor. And he said, if you're going to go into real estate investing and not partner with anybody or not partner with a company, you're going to do it all on your own, just think your first 2 or 3 properties that you invest in are your college education, right? And you're going to lose money. Don't expect to make any money whatsoever on those first 2 or 3 properties. And you'll start earning your money again when you get to your 4th, 5th, 6th, 7th property. But you're going to get an education like you've never experienced on those first 2 or 3 properties. And, it's kind of like paying that dumb tax. We're getting our education. And so we've come up with a system and partnered with some great folks that can help you overcome those things. So you don't have to lose your shirt on those first 2 or 3 properties. You can actually make money on your first property and get an amazing tax incentive. Some other things that you can partner with the government in are energy projects, right? What comes to my mind is solar projects, right? There's great solar incentives out there. Some other projects include, oil and gas investments, right? Very, very popular, especially if you become active in those businesses. You can use the losses or the incentives from that, just like with real estate, to offset W-2 income or business income, which is an amazing thing. There are projects where you can invest in film and TV production if you did take advantage of the Internal Revenue Code to offset taxable income and become a producer on a movie, which is really, really interesting. There are equipment and software plays that you can make through either your business or as a W-2 individual to help you offset W-2 income. So instead of sending that money to the IRS, or, maybe you've had with that money withheld on your paycheck, you can adjust your withholdings and redeploy that capital to these things that are incentivized by the tax code. There's energy credits, right? There's cost segregation for rental properties that allow you to accelerate depreciation. There's bonus depreciation and Section 179 depreciation strategies where you can offset your taxable income using these things. And why does the government want to partner with you or incentivize you, right? Is because you're building the infrastructure for America. You are deploying this capital to give people homes, provide energy, you're providing jobs. You are stimulating the economy so that they don't have to go on welfare, right? They don't have to provide Section 8 housing because you're doing that for them. And therefore, the government says, hey, we're going to give you a tax break because you're helping us out here. And so you really become that partner with Uncle Sam in helping run the American economy. So here's the thing, right? We've got a lot of issues we've got to deal with 2025. You got to file your taxes. We've got to deal with a slow government in terms of processing and things like that. And, if you missed the boat in 2025, you didn't plan and do the things that you needed to do, you weren't proactive, that's okay. Now is the day to start for 2026 because a lot of these programs fill up. They fill up quickly. They fill up by the end of the year. And if you wait till the end of the year to procrastinate, you're just not going to have the opportunity to participate and, have a plethora of options of what you'd like to invest in to reduce your tax bill. So now is the time to be proactive. And now is the time to start thinking strategically. Now is the time to start being intentional and figuring out, hey, what can I do to legally reduce my taxes? How can I partner with the government? What can I invest in that is going to give me a good return, personally, and also give me a good write-off on my tax return? So really, tax season isn't just about filing your taxes. It's about utilizing the strategies that you've put in place from the prior year. So when you file your taxes, you know how much you're going to pay. And hopefully it's not a whole lot because you have been proactive. You've been strategically meeting with your tax strategist on at least a biannual or quarterly basis so that you are paying the least amount of tax possible. If this episode struck a chord with you, please feel free to book a call with our team to review your tax situation. Also, we'll put a link down below where you can request our free tax playbook for high earners. That's anybody that has taxable income over $500,000 or more. And please share, subscribe this episode. And we would love to, help out somebody, or maybe somebody that, needs help with these types of things to be able to lower their tax bill. This year, procrastination with taxes is expensive and strategy is rewarded. And it's rewarded every single year when you are proactive, you're intentional, and you're aligned with your tax strategist to pay the least amount possible. Once again, I'm Jeff Trapp with the Tax Planning Pros and the Jeff Trapp Podcast. Thank you so much for joining me today. And I look forward to chatting with you guys again next month. And please don't hesitate to send in your listener questions. Those are always fun to go through and do an episode on. And we'll chat again soon. Have a great February, and we'll see you next month.